Good evening, Ken at Tortoise Capital Nightly Strategy Podcast for July 30th, 2024. We'll start with the sniper trade of the day. This is our focus stock, NVIDIA. We're trading it on the 10 minutes. This is yesterday's close. This is the opening range 10-minute. In the next bar, it broke down below that. So we got our entry right here. Looking for the short side trade. With our standard risk box on it of $1.50. It sells off hard when the RL10 reverses. We jump our stop from the trailing PSAR down to the skin of the dragon, and we collect one, two, about 3R. We re-enter the collapsing dragon short. It scratches immediately. Take the supported spring crossing with the standard risk. It gives us 1/4 of an R, which takes us into the close. So a little over 3R in NVIDIA. This is SPY, just trading the broad market itself today. This is also on 10 minutes. This was yesterday's close. This is today's open, so that pink box represents the size of the gap. This creates the OR10, the opening range 10. That's the high of the first 10 minutes, the low of the first 10 minutes. The second bar was an inside bar, so there's no action. And third bar breaks out to the downside, so we're short with the usual $1.50 risk box. The S&P sells off hard when the R10 reverses. We take the jump stop here at the skin of the dragon, and that returns 1, 2, also 3R, not unlike NVIDIA. And we tried the collapsing dragon continuation for a scratch, the SSC for about 1/4 of an R. And we noticed the gyrations here in the last 20 or 30 minutes. Tactical traders playing some games. We had some guys that were trading 1 minute and 3-minute bars that actually made a really nice trade on that reversal from the dragon horns. On 3 minutes and 5 minutes, that looks like dragon horns. So a reasonably good day at work. Our normal sniper trades in DIA, Mexico, and Brazil were pretty non-productive today. There was an awful lot of grinding. There was no money to be made in our usual patterns on those. So if that was your experience, then you are executing the trade correctly. Here's traders from today. Just want to show a couple. This is Brian basically scratching out. There was no movements in his currency pairs. This is the Kiwi and the dollar. And also in gold versus the dollars. There were just no moves until much later in the day when he's not around. Hamad had a really nice work here in XLK. That's, I think, being driven by NVIDIA and Microsoft weaknesses. And when XLK is suffering, that explains SPY suffering. So he gets a fractional win a fractional loss here, fractional gain, gets re-entry, key to sanity, picks this up, doesn't get the second and third trades in here. And the rest of his day was kind of grinding, but that good work finding the mover in XLK. Probably over trading a little bit on some of the other ones that were just not following through. All right, we'll shift to the daily report, see where we're at. Yeah. All right, in the 150-day look back template, we're in the bottom quarter of the 5-day, 10-day, and 30-day range. So this was a considerable pullback. This from the peak all the way down to here. It's looking a lot like this move. Now, are we going to see 1, 2, 3 more moves to the upside? I wouldn't count on it as we approach November, because remember that last time the pullback was to solid support along the 150-day VWAP. This one we've moved it out sharply there, so there's not the same sense of support that's in here. Now, I'm not saying it can't go, and that has been a significant pullback from 568 to 544. That's a 5% sell-off. So we're starting to get in the territory where buy on dip folks are getting hungry for that move. But the weakness in technology didn't help that narrative at all. So this is one where we're trading it very carefully, cards closer to the vest than ever before. Infrequent swing trading, mostly intraday and flat overnight. Let's go to dashboard number 1. We are in the dangerous bullish volatile. You can see the short and midterm weakness in the NDX. Risk off continues to be abnormally weak, and it is supporting sharp moves to the downside. There's buy on dip opportunities in tech and the broad market itself. So that's the one that could trigger some buying pressure after 5% sell-off. We'll see how that goes. The strength in the market in Johnson & Johnson, Coke, McDonald's, Pfizer, American Express. Weakness in key tech leaders like Intel, NVIDIA, and XLK. Some haves and have-nots today. I always look first at the NDX breakouts. Coke and McDonald's getting it done. Pfizer getting it done. Weakness in key tech leaders like Intel, Microsoft and Merck getting smoked. Yeah. So that's the tale of this tape. In the ETFs, mostly just weakness, plenty of auto framers, a couple 551Ws that are of interest. But this is a market that's holding its breath right now on a 5% sell-off. Wouldn't take much terrorist activity in Paris to trigger some negativity. And that's reflected in the vast number of pretty good setups here in the auto framer. A lot of good positive names in there. So pick your targets and recognize it's a buyer's market and there's no hurry. A couple squeezes in Home Depot, DuPont, and Boeing. Intel's up there high as well. And plenty of auto framers from our TC2000 package. Remember that our TC 2000 bundle is on sale through the end of the month tomorrow at 3,000, and we're gonna suspend sales on that for a while. We'll make the handoff and transition to a couple new managers of that bundle as they get fully read on and are looking to prepare some trading packages for that bundle. So this is a last chance to get it on the best price that you'll ever see on it. Lots of winter starting to creep in as the summer dwindles. The NDX multi-time frame is showing haves and have-nots for sure. The non-tech guys like McDonald's, Coke, PayPal getting it done, and finance, real estate, and treasuries getting it done, along with energy, but all the techs getting smoked. Some amazing opportunities in our frog trading sniper targets here. Marijuana, Nvidia, Tesla, Apple. That's some good work there too. And Mexico now is up in here with a really strong fraud quality number and a reasonable intraday volatility. You can definitely see the air coming out of the balloon here as the parabolic regression line has already rolled over and crossed the straight line regression. The regression line slope is below its long-term average and coming back to flat. That's basically zero growth over the last 30 days. That's a 5% sell-off from the high to the low. So that's a place where you wouldn't be surprised if it found support like it did last time. But as we get closer to the election, I think the less likely that is. And that's I want to show Z-scores here too. We are approaching a key moment in the slope statistic here. Let me go back one. Come on, Ken, get your mouse together. Yeah. So this is the 10-year slope statistic, right? So it's comparing the upward slope or the downward slope, in this case, the sideways slope of the 30-period regression line. And it's right at the 10-year average, which is just slightly above zero after what's been a pretty good bullish run. It's come all the way back here. Now, the last time it was there was just prior to the COVID crash. Not saying it's going to crash, but all of the good feelings are gone, and we are in a zero state with regard to directionality. And volatility is returned in terms of ATR divided by price. I just want to bring that to your attention there. And then this one is kind of crucial, I think. So that this is that zero line on the Z-score, the slope. And you can see it's come right back to the zero line from where it was pretty aggressive and good. It's come all the way back to here. Now, the fact that we're short-term oversold could lead to a stronger move and stabilize this here. But this could also easily drift just like it did here. And that's what triggered this. So we're at the bottom of the river, and we could be setting up for another, 10% additional sell-off. If this doesn't find support and recover, there's another 10% that could easily happen as part of just normal market correction. So we got to be mindful of that as a short-term trading opportunity, and then also a cautionary tale to not get extended on initiating too many new swing trades. All right, that's everything for today. We'll get this published and posted, and we'll be ready for them tomorrow. Take good care.